Hello, welcome to a discussion on DeFi. I'm Colin, and I am co-CEO and CCO of Zilliqa, which is a blockchain based in Singapore. It was founded and launched in Singapore, and mainnet went live in January 2019. And we use sharding to create a much faster, more efficient blockchain, as well as having our own programming language called Scilla, which is safe by design. So we focus quite heavily on decentralized activity, decentralized finance, open finance, as we like to call it, as well. I'm very excited to have a discussion today with Lisa Tan, who's from economics design, also in Singapore, who is an expert in a couple of areas, tokenomics specifically, and game theory, which is probably one of the more fun aspects of blockchain science. Welcome, Lisa.
Hi, nice. Thank you for having me. It's nice to be here.
It's a pleasure. Now, we're going to talk about a very interesting topic, which is decentralized finance, or DeFi. And we're going to focus on what DeFi means to me, because people do have alternate ways of thinking about what decentralized finance covers and where the focus is. In fact, there's been a lot of headline grabbing tokens and exchanges and vast sums of money which have been flowing into the decentralized finance market. And we'll probably start there, but just at a high level, Lisa, what does DeFi mean to you?
That's a very good question. So I would say that DeFi is really about removing inefficiencies in traditional finance and finding new creative solutions to make finance a bit more efficient, to make finance a bit more inclusive for everyone to participate. What does it mean to you?
Well, to me, it means not having a middleman, really. Having semi-autonomous or consensus-driven exchanges or projects which effectively are not able to be overly influenced by one person or one entity, or even, as Satoshi said famously, bad actors. So we're trying to avoid that sort of behavior in decentralized finance and open it up to mathematics, consensus, and community understanding.
Yeah, I definitely agree with that. And I think that will be on the technological back end of finance, where everything is automated with machines, and then you have humans being the one making decisions, which is the game theory part, and then you have machines executing them, which is reducing inefficiencies, which is reducing middlemen. One problem that I am noticing right now is that as DeFi continues to be extremely complicated, where you need to have some knowledge in finance, some knowledge in technology, some knowledge in economics, some understanding in math, to really get DeFi, we're actually creating this kind of scenarios where we need middlemen again, because these things are so complicated that you need middlemen to translate the language of finance or the language of technology for regular people to use. What do you think about that?
Well, I think we are trying to avoid being the middleman, but I think we would call it facilitation. And obviously having expertise in the blockchain arena and having the ability to build applications and dApps to our blockchain, we're looking to help businesses to employ the best practices in decentralized finance or decentralized security management for their digital assets and help them into this way of working or this way of running business, which of course is going to become much more dominant in the next 2 to 3 years. This is the Blockchain Business Expo we're talking at. So we're focusing a little bit on how enterprises can work in decentralized finance. But I'm interested in some of the token projects which have hit the headlines recently. SushiSwap obviously was a very interesting project. Uniswap is the grandfather on Ethereum blockchain for most of these DeFi projects. How do you summarize the evolution? How did it take hold so rapidly?
That's a good question. So if we look at a macro view of how it has evolved, if you just look at 3 months ago, the total capital in DeFi in general, it's about $7 billion. And today, just 100 days later, it has doubled to 14.5 billion as of right now. So that growth has just sprung almost like out of the blue. And I would say it has evolved in two different areas. The first one is, if you imagine DeFi as a big tree with a lot of different kind of financial assets and financial products available. Previously, in the beginning of the year, we had a lot of the low-hanging fruits, a lot of general exchanges, general lending and borrowing, things that's a lot easier to capitalize and capture the market. Today, this tree has gotten a bit more lush, where you have a lot of other stuff available. You have pretty good insurance coming up, a lot of different types of insurance, different models of insurance, insuring different kind of risks in DeFi. You have derivatives, insane amount of derivatives. You have a lot of different kind of experiments with the same kind of concept of AMMs or decentralized exchanges, but different ways and mechanisms to get the most efficient price for everyone and try to reduce the risks available. So number one, the amount of products and services have boomed amazingly. And the second thing is yield farming. As we all know, in summer 2020, everything is just about yield farming and trying to get as much returns as possible with your crops growing, with your yam token, your sushi token, all the kind of food tokens, and trying to get different types of returns. Although this could be seen as a little bit scammy, but in reality, this is a great way to bootstrap your community, especially when we're talking about decentralized community. We're trying to issue these kind of governance tokens to the users. Previously in 2018, one of the bad things about ICOs is that you're just issuing tokens to these random people who just have capital. And that's quite unfair when we're talking about a decentralized equal future that we want to build. So why, instead of rewarding this kind of issuance or this kind of equity to people who have capital, why don't we start issuing it to users of the system, where they now have ownership and they have actual skin in the game because they actually use these products. And when people feel appreciated and they feel like they are contributing and they're rewarded for contributing to the protocol, they do want to stay in the system. And more people are being attracted into the DeFi ecosystem because of that.
So we do have some jargon which we run across. You did mention AMM. Maybe you could just explain how that works.
Absolutely. So AMM means autonomous market maker, and we see them in a few areas. So the two main areas will be exchanges, decentralized exchanges, and the other type is a portfolio asset management kind of systems. And if you think about, in a very simple term, just think about a big cookie jar with two types of cookies in there. You've got chocolate chip cookies and you've got macadamia nut cookies. What you do is that in the jar, you have a lot of these different amount of chocolate chip cookies and macadamia nut cookies. The beauty of this jar is that you can always put a chocolate chip cookie in to get macadamia cookies out. And this jar will always give you some cookies for every cookie you put in. The cool thing is that with math, you can determine how much macadamia nut cookies you'll be receiving for every chocolate chip cookie that you put in. And this thing is also it's alive. It's a dynamic system. So it means that the prices of, or the exchange rate of macadamia nut and chocolate chip cookie is not fixed. It always changes based on the total amount of cookies in the jar. So this is a completely new model that we have not seen anywhere in traditional finance. And this takes into this idea, this mechanism concept came from energy conservation that we have in physics. So this is really cool because we're exploring new ways to make finance a lot more efficient by taking concepts that already work in other areas of science. And this is one of the beauty that you have in DeFi.
So lending and borrowing is well understood and highly traditional in the financial services industry. For everyday businesses, are they soon to be looking at different lending, borrowing technologies in the DeFi space? People who provide liquidity in a different way that can be extrapolated from these token pools and then perhaps changed to stable coins, which would be official coins of a country denomination. Is that something that businesses will be looking at in the next couple of years?
Yeah, that's interesting to see it from a business perspective. So from what some people are doing from a business perspective, they're already they're borrowing and lending with crypto because the rates are a bit more flexible. And a couple of months ago, the rates were very, very good, a lot more attractive than whatever that you have in the real world or the physical world or the fiat world. Today, with financial crisis, with economic easing and quantitative easing, that might change a bit. But as the world continues, the economy continues to recover, and crypto is seen as a very attractive alternative, definitely crypto becomes one of these tools available that can be compared with all the other regular tools available. The other thing that's quite interesting, or two other things. The first one is having crypto in the assets as one of these hedges in a company. So for example, there are a lot of listed companies that are increasingly holding Bitcoins and other cryptocurrencies, which is a very good boost because that could be hedging with whatever inflation rates that's going on, or that could be just bolstering the kind of assets that the company provides or the company keeps. So that's very good. The other way is for companies who have these kind of assets, they can turn it to stablecoin, as you mentioned. So for example, if you have Bitcoin and a company can have Bitcoin in their assets, which helps which is an asset to perform as hedge in the system. And you could use Bitcoin in one of these staking models or putting in one of the lending and borrowing protocols. And then you can be taking stable coins out of it to be using in your daily operations. So now you have exposure to both Bitcoin assets. At the same time, you could be using the exposure that you have in all the other assets in your daily day-to-day operations. So this is something very interesting, and it is in a decentralized ecosystem. So there's more flexibility to be using and playing around with these kind of tools available.
Yes. Now, I'm interested also in the regulatory aspect. Focusing on decentralized finance, there isn't really much for regulators to go after in terms of the people providing these services and using these services. However, obviously in Japan, they've worked hard to build out a regulatory framework for cryptocurrencies, which certainly covers centralized exchanges, among other things. So how does business work with a kind of unregulated environment? What are the things that businesses need to be aware of before they work in decentralized finance?
I guess it really depends on the kind of businesses or the kind of industry the business is in. So for example, if you're a bank and you're a traditional bank, then it's very important to look at the different kind of risks, looking at what are the risk frameworks to understand how to deal with all these cryptocurrencies. Whereas and then you have the different kind of companies where you're not dealing with crypto at all, and then to figure out which kind of cryptos or which kind of risk are you willing to take on, and figuring out which assets are applicable to the risk appetite. And if you're in the cryptocurrency or in the crypto space, then it's a lot easier to manage the risk because you're in the space and you're an expert with understanding how to use the crypto to your best advantage.
Currently, Zilliqa is working on HG Exchange, and this is in what is known as the MAS Sandbox. It's the Monetary Authority of Singapore's kind of playground for people developing new crypto-related assets and securitizing certain things. Zilliqa is working on some very interesting projects to tokenize private shares, for example, and physical products, which will be made available to the retail market later in December. So we're quite excited to see how this decentralized way of offering previously locked or private value propositions from businesses and enterprises goes into the public primary accredited investor market, and then secondary sales, which are free and unfettered. Do you see this changing the dynamic from centralized securities exchanges, for example?
You brought up a fantastic point, because I think that's exactly where the value add of tokenization can really come in, beyond the yield farming and beyond all these kind of DeFi products, is how can we use tokenization as an on-chain solution, or this innovative way to be resolving off-chain problems. So the tokenization of regular shares, we could do that in digital world, which is good, that's solved. But right now we are looking at new ways of decentralizing that power, of decentralizing that responsibility, and using tokens as a way to incentivize these different kind of bond holders or these different kind of equity holders, which is very interesting. The other value add is really a lot of these big companies and these actual asset offering is always done by big investment banks. they're very expensive. And we go back to the first point of removing intermediaries. This is exactly where tokenization can come in. We remove intermediaries, and for all the markup that intermediaries get, we're now distributing it to all these people who came in and adopt this technology first, and to be adopting this new way of finding solutions and then rewarding these users instead of rewarding intermediaries. That's absolutely brilliant. And that's the true value add in DeFi, because it's about opening access to everyone. You talked about open finance. It's all about opening finance to everyone. Everyone can use them. You don't have to be very specific kind of very smart person. As long as you believe in the project, you can be part of it. You can be part of the equity. You can be part of the governance. That's a wonderful future.
Yes, we're pretty excited. We've seen a couple of projects in Japan, for example, looking at central bank digital currency type creations. Not exactly cryptocurrencies, but certainly centrally managed digital currencies. And we've seen a few projects around the world with banks now looking to try and counter what they see as some kind of threat from stable coins. But there seems to be a place, certainly the guys at the IMF are quite friendly and open about this. There seems to be a place for third-party stable coins from trusted sources who can back those stable coins with reserves. And we see, just briefly with our own projects, the XSGD stablecoin, and soon the XIDR stablecoin, and soon the ZBUSD stablecoin, that Zilliqa can create a harmonious stablecoin group that, for example, helps remittance. So maids who are working in Singapore sending stablecoin to stablecoin transactions to Indonesia and saving a tremendous amount on the transmission charges or the commission fees from point to point. So what seems like a really good idea still has some regulatory challenge. How does decentralized finance prove itself to central bankers that it can work complementary to their own systems?
That's a good point. So decentralized CBDCs, central bank digital currencies, are really tied to the idea of putting trust in governance or the government that's issuing that, versus stable coins is a little bit more of putting trust in the system itself. So when we're talking about the creation, the mechanism to create these kind of currencies, is completely different. And that's where the value add comes from. With central bank digital currencies, it's just the government printing money, which is completely fine. That's how they do it, and it will continuously exist that way. Whereas in stable coins that's issued privately on-chain, they come in a lot of different forms. You have on-chain collaterals, off-chain collaterals, and even algorithmically defined valuation. And these are tools, are innovative tools that are very interesting. And if you want to take a step further, you can even create a basket of goods or a basket of different kind of currencies to form a general currency that can be used using these kind of mechanisms. So maybe stable coins will not exist for a very long time, or maybe it would. But what we're experimenting over here is the mechanisms that create all these different tools, which is extremely, extremely exciting.
Yes, we are right at the front line of innovation in this space, and the creation of currency and the consumption of currency in different forms across huge numbers of people who will not have to go through multiple steps to get to money or to send money anymore. So we're pretty excited. We have our own ZilSwap platform, which is ready. So people are able to create tokens and to manage liquidity pools and to help back the community in developing projects in a way. So we're quite excited about how our community is developing and adapting to decentralized finance and the DEX mechanisms that are being created around the world. And it's looking like our time is up, Lisa. So it's been a pleasure talking to you. Obviously, we could talk all day about decentralized finance and decentralized security asset projects. But for now, we wish everyone at the conference a fantastic day, a fantastic educational experience. And of course, if you need any help, you can always get in touch with us. Thank you.
Thank you. Bye-bye.